In today's video, I'm going to try and reveal everything that I know when we talk about forex trading. That is, I'm going to give you my full forex course, and I'm trying to take it slow by slow so that you guys can understand, right? Whether you are a newbie or a beginner, intermediate, I think this is going to help, right? So yeah, I'm going to take it slow by slow and show you what most forex gurus basically hide from you, right? So real quick, let's just get started. Yeah, I'm going to talk about support and resistance, trend line, ICT, try to cover everything, but then I'm going to make it very simple so that you guys can understand. I'm not going to be technical that much, right? So let's get started now. First things first, let's start with what is pips, because we are going to deal with the pips, right? So basically pips is just points in percentage. What am I talking about now? You need to know pips because you will try, when doing your trade, that is when you are placing your trades, you need to know how many pips you should be targeting. You need to know how many pips you should be risking. So it's very important for you guys to know about pips. So the easiest thing, let's not do mathematics here, right? The easiest a way to do pips calculation. You see, let me just show you. Over here you have your tools right here, right? Mine are here because these are the favorites that I do use basically, and so I don't need to go all through this, right? So over here you have all these, but then I bet you guys know about that, right? So over here we have long position, short position, so I'll need you to take long position and short position, and of course this right here, price rate, very important. This one you'll know pips sorry, very fast, right? So yeah, let's get into pips. Now let's say you want to look for buys. You take this price range tool right here. So take it from maybe this level where price started going all the way. Now if you drag it up above, let's say up to this level right here, so you see over here is written 92.2. so that's 92.2 pips, right? Now if you want to talk about points is like now multiplying this times 10. 92.2 times 10, so that's like 922 points. So there's difference between points and pips, right? But then let's talk about pips because most people use pips, right? So this is 92.2 pips, right? And I'll repeat once again. Let's say you want to measure how many pips from this level all the way here. Let's see how many pips price move. Take it and click that, drag it all the way up. So right there, so you see the market move 94.8 pips, right? Once again, if you want, let's say how many pips the market move from this level all the way to this level. Very simple, right there till there, that's 210 pips, right? And if you want to talk about points, multiply this 210.6 times 10, that's like 2106 points. Easy. So that's how you guys can know pips. But then now let's use the long position and short position, right? So let's say you did take your entry position around maybe this level right here. I don't know why she's not clicking. Just a minute, let me see. All right, so yeah, let's say you've taken your buy position. For instance, let's say you took a buy right here. So take that buy or long position, it's written long position, and then place it right there, something like that. And over here, so you see this red right here, this red is usually the stop loss, and this green or blue, whichever, that's usually take profit. So let's say you want to take your profit right here. Your take profit, let's say, is right there. So you drag it all the way up, and let's say that is your take profit. Then let's say you want to have your stop loss maybe below this level, so you need to adjust that, of course, around that level, correct, something like that. Now if you move your cursor right here, let's just click right there. Now if you look at this is very simple. Look at this, we have risk to reward ratio. So this is 4.26, right? You risk 1%, to target 4.26. Very easy, you don't need to do any maths, right? So over here you have 28.2, so that's like 28.2 pips. That's like 28 pips, right? Now if you look over here, this is 120.2, so that's 120 pips, right? Now if you want to target 3%, let's just adjust. Now I need you guys to look at this level here. As I adjust, you see the numbers are adjusting to right there, little bit right there. So you see 28.2, almost 3.87, I mean 3.07. That's like, you know, 3%, right? So that's how easy it is to calculate pips. The same thing you can do if you're looking for shorts. Take your shorts and do that. So yeah, enough with the pips. And now the next thing, let's talk about I need us to talk about let's talk about trend lines, right? Very simple, because right now we understand and we know what we want. We know what we should be looking for when doing our analysis, right? So the next thing is how to start doing our analysis, and I'm going to start with the trend line, right? I understand that most people don't know how to draw trend line, because when I look at the internet, I just see people just throwing in, you know, this tool right here. To me, this is not a right trend line. This is not the best way to draw trend line, right? I'll remove everything. Now for trend line tool, we have this tool right there, written trend line, right? Now when drawing your trends, you need to start your trend line from, maybe you can start from the last two touches, you know. So the secret is make sure we get at least 3 touches, right? 3 touches of the candlestick, right? So I do advise guys that you zoom out all the way, just zoom out, right? Scroll, zoom out, something like that, so you guys can try to understand what price is doing. Make sure your screen is something like this, right? Now slowly by slowly take it, you know, try to look out for zones. So for instance, let's talk about this level right here, right? So if we want to draw a trend, let's just zoom in slowly by slowly. So let's start from the last two, 1, 2 right there. So take my trend line, start from the touch right there, something like that. I'm looking for 3 touch, because the reason I'm looking for 3 touch, because that the 3rd touch, that is where we should be looking for our end position. Now once that's done, try to zoom in. The reason why now we're zooming in is we want to make sure we don't make any mistake, right? What am I talking about? I'm talking about this. Now you see these are mistakes, right? I want my trends to touch the wicks, not the body, right? Because this wick still count. If you go to the lower time frame, these are full body candlestick. If you go to 5 minutes 15, they are full body candlestick, right? So something like that, make sure they touch. We adjust it, something like that. And now adjust that too. We're concentrating on this the last two, 1, 2 touches, right? We have the market goes up, gives us a touch, then goes up. Now the next thing is waiting for the market to come back to touch, and now start looking for our entry right there on the 3rd touch, right here. And now if you guys can see what happened on the 3rd touch right here, the market respected and went up. So let's say we took our buy position tool right there and had our stop loss around that level, target even 3%, at least, you know, at least. You don't need to target 3%, just at least. So you see price goes to your favor, you hit take profit, right? That is it, right? But we'll come to this later. I've not explained this, but then I'm going to talk about that later. Right now we're still talking about trend line, right? Good. We'll talk about this later too. Right now we're talking about trend line, right? So what if it's on a downtrend? Let's flip the screen. I hope you guys can see. Start from the last two, 1, 2, then on the 3rd, look for your sell position. Look for your sell position. I don't need this thing. And take your sell position tool. Let's say you had your entry right there. How it? Your stop loss. Come on, that's let's say you had your entry position. Sell, let's say, because I flipped my screen. Why is this thing not clicking? Here, right there. Your stop loss, let's say, then at least target your 3. At least you guys can target whichever amount you guys are comfortable with, but then you don't need to be greedy, right? I usually advise target at least 3%, you know, something like that. So with that done, let's talk about now. Let's move to support and resistance, right? So now this is just based on a trending market. Basically, this is still a support and resistance, but then on a trend line thing. That is, if I use another trend line, maybe from this level, something like this. So this will be our support level, and this is going to be our resistance. So now we have a kind of what's this, demand and supply, type of thing. So now let's use that, and let me show you what I talk about. What I mean when I talk about support and resistance, right? So now, if you look at this level, the market kind of moving sideways, right? So now it's just the same thing. You can use this trend line tool if you want, or you can use this rectangle tool if you want, right? We are trying to mark 3 touches, 1, 2. So you see we have 1, 2, and then on the third, price drops. Right here, you guys can mark at least 3 touches. This one, you can use this. You can have 1, 2. Price never gave us the third, right? Something like that. Now over here we call it a supply zone. Over here we call it a demand zone. It's just, you see the same thing that we used when drawing trend line, right? Just the same thing, 3 touches, but then this time we are moving horizontally, right? Correct. Now the other time when we were using a trend line tool, this was just parallel line. But then when we are using demand and supply, you can use this too if you want. And let's just see, you can also use this if you want. It's just the same thing, right? You just need to make sure that at least you get 3 touches. That is it. I hope you guys understand. If you don't understand, rewatch, or let me know what you miss in the comment section below. But then these are just smaller details, but then I'm going to get into deep. So these are just as a start, right? As a start, I'm going to show you how we can use them when doing live analysis, and how you can interpret them and help you out. Right now, that's based on support or resistance. Of course, now let's talk about patterns, right? Patterns are very, very important in this forex market. Whether you are trading trend lines, whether you're trading support or resistance, demand and supply, ICT, SMC, trust me, patterns are very important in the forex market, right? Now here comes what I'm talking about, the pattern, right? Now remember when I said I'll come back to this. Let's talk about this level when we had our trend. Let's just bring the trend line back. We had our touch 1, 2, 3 right there, and we can zoom in right there. We see we have a good touch right there. Now here comes the patterns. The reason why I say patterns are very important is, if you miss pattern, basically you will not understand what price is telling you. Right here, this is also another trend, but it is a pattern right there. Come on, let's have this right here. I can adjust this because I know it's on the third. I see this is a pattern right here, right? You guys can go to the internet. In fact, let me just show you real quick, and let me what I'm talking about, forex patterns. So you guys can see what I mean right here. You can go to the images, and right here, in fact, you guys can go to baby pips, and you'll see so many patterns. I can click this. They are very, very important, basically very, very important. So yeah, baby pips basically have even their names. We have symmetrical pattern, ascending chart, there's so many, right? Let me click on this, but this is not baby pips right here. So over here we have patterns. So if we go to our chart, we've drawn something. I think right here it was a symmetrical triangle, basically. Yeah, right here you guys can see we have that and we have that. So let's confirm. So this is it. It was a symmetrical triangle right here. This is the pattern right there. Right now, we also, if you look at this level 2, we have a certain pattern too right there. We can have that. We can have that right there. They're very important. I'm going to show you why I say they're very important. Right. So yeah, there is a way that you guys can trade patterns. Now, you see this pattern, they're just the same trend line. We have a support right there. We have a resistance right there. Support right there, resistance right there. But then this time they're not, moving like this parallel, right? So once you've drawn your trend, right there, you've had your third touch. Same thing you should be looking for when trying to identify the kind of pattern that the market is giving you. Try to see by touching at least 3 touches, right? I've not touched, yeah, I've not adjusted, something like that, right? Now, once you've identified this kind of pattern, the next thing is wait for the market to give you a clear indication. The thing that you need to do is basically wait for price to break out of these patterns or that channel, and that is where you should be looking for your entry, position, maybe, right? Something like that. Then your stop loss maybe below right there. Good. Same thing, wait for the market to take out the pattern, and that's when you should be looking for entry property, right there, something like that, right? So right, let's continue. I think the next pattern we should be, so yeah, when you come to the market, basically, then the only thing that you guys can, the shortcut, I'm trying to give you a very good shortcut, try to look for patterns. Once you get the pattern, the reason why I advise pattern is patterns will tell you the market direction, right? Yes, we're using trend lines and support and resistance and ICT, but then if you include pattern, the price will be easier to read. You'll know, or you'll try to understand where the market will try to go. So we have this symmetrical triangle. We also have bullish flags, right? For me, I usually use bullish flags, right? Now if I try to zoom once again right here, we have patterns, another pattern right there, so you see, once price breaks out of it, the market goes, right? We have another pattern. So yeah, you need to be keen, right? You need to be keen when looking for patterns, right? Now if you look at this level right here, basically I also see another pattern, right? But with the naked eye, if you're not keen, if you don't zoom in, you won't see the pattern, right? Let me show you the pattern I'm talking about. Look at this. I just said look for at least 3 touches. 1, 2 right there, something like that. I hope you guys can see that. And look at this, so amazing. 1, 2, 3. And what did I say? The moment price, this is also another bigger version of symmetrical triangle, right? The moment price breaks out of this, the market usually moves, right? Price broke, and that's when she did move all the way up, right? Same thing, if you can zoom right here, there's also a pattern right there. Price gives us codes. It's just for us to try to decrypt these codes, and once we identify these codes and crack the codes, trading is going to be easy, right? So you see, we have so many patterns. So I can remove everything once again and start afresh. 1, 2, 3. Just repeat the same thing. Remember, right now we are not using trend line. We are talking about patterns. Now, the same way we did analyze trend line using 1, 2, 3, the same thing we are trying to use on pattern 1. We have a 1, 2, third, right? On the third touch, that's where price usually behaves. 1, 2, 3, something like that. So we have faster sector. The third, price goes up. 1, 2, 3. On the third, we need to look for reaction. If price tells us that she's breaking, okay, fine, we should be looking for buys. If price tells us that okay, she's not ready to break, she should be dropping, something like that, right? And now if you look at this level 2, something like this right there, 1, 2, 3, and also right here, 1, 2, 3. Same thing, price breaks, then goes all the way up. Now also right now, right here, if you look at it, basically generally you might see, oh, there's nothing right there, but there's something. Let me zoom in for you guys to see. Like I say, everything goes, right? Everything as long as it makes sense, it goes, right? Look for 3 touches once again, correct? Let's do this once again. We can have it, let's say probably We can start from 1 2 3. As long as it makes sense, we go for it, guys. We can have that. See, I can let me try to remove this. As long as it makes sense, guys, right there. We can have this right there. I think let me just take this back, guys. Like I say, guys, as long as it makes sense. Remember, we are looking for those 3 touches. As long as the touches and the patterns come through, we go for it. So that is what we have basically right there. So this is also another pattern. Let's just go and confirm which kind of pattern that is. What's this over here? Somehow still looks like it though, like our symmetric though, but no, it's not that. We had maybe something like a rising wedge, should be something like a rising wedge, but then you don't need to master all these names, right? Might be a rising wedge though. Yeah, for sure, that's a rising wedge. Good. So now, right now we have this. I remember what I said, guys, on the 3rd touch, that is where we should be looking for our entry. So if you look over here, we've seen the price has given us 1 2. We've not seen any 3rd touch. So look at this level 1 2, and on the 3rd, you see the market has started reacting. Kind of, she wants to drop. So that is what I'm looking for right now. As price drops, I'm waiting for the market to see reaction around this level. Now as it drops, I also want to look for patterns once again. Now if you see right here, we also had another pattern, guys. Right here we had a pattern, right? Let's go to the H1. Sometimes it might not be clear, but then lower time frame usually prints them too. Right here, 1 2 3 1 2 3 1 2 3 1 2 3, right there. This was another pattern, somehow bullish flag. And also right now she has not yet given us any clear thing. So for us to look for buy position right here, we need to wait and see a reaction. What am I talking about? Wait for another pattern. Now for instance, let's say we take it from maybe this level all the way to this level right there. Good. Let's bring in this. If the market decides to give us this kind of a pattern once again, now if you look at history, she did give us that kind of pattern, then went up, right? Now if she behaves the same manner right here, gives us another pattern right there, then that will be a good sign to start looking for our possible entry buy position right there, at least target 3%, right? Now this time around, we need to adjust this because right now we are at the 3rd touch, so we will adjust this so that we can understand the next take profit. Adjust that level right there, have it something like this, right? So why do I say that? Then that means we're starting from 1 2, remember 3, the 3rd touch. That is where we should be anticipating the market should be going to hit. Because why? Higher high, higher low, 2nd touch, higher high, higher low, 3rd touch, higher high right there, gives us a 3rd touch. That is a very simple way, to try to do your analysis. Now let's try to incorporate ICT, right, and SMC, but then we will also try to add these patterns. Correct. Now for the ICT thing, let's just maybe start. This is just the same pair that I'm going to use all this strategy on. Right now for the ICT, I'm going to give you a very simple way for you guys to understand ICT. I know ICT is full of theories, right? ICT is full of theories, but I'm going to simplify things for you guys to understand. Correct. Now, maybe we should start from we can start from this level and analyze this all the way to this level, right? Correct. Now, here it is. For the ICT, I usually recommend look for an order block zone. Order block zone, I'm talking about levels where price first did make a move, right? And mark that level. So if we start from this level right here, right? Now we mark this level right here, something like this. Mark it. Now the moment we mark it, now if you look at this, we had the market moved all the way with an impulse phase, right? So Our next thing is wait for a pullback, right? A pullback. Now, as price pulls back, there is a difference between a pullback and an impulse phase, right? We need to see the kind of pullback. When a price is pulling back, we are looking for patterns that we've just talked about, right? Guys, if you forgot about patterns, just go back and try to rewatch and understand, right? Now, as price pulls back, we wait for patterns. 1, 2, 3. Once again, guys, ICT don't give you most people who trade ICT don't incorporate trends, right? But for me, I'm trying to simplify things for you guys to understand everything, right? So go to the 4-hour and understand what we just did. I repeat, look for a place where price did make a move and wait for a pattern as a pullback right there. 1, 2, 3 right here. 1, 2, 3. Adjust it if you like. I can have another one right there. So that's a bullish flag, right? Now, for those who trade support or resistance, we have levels that were broken. Maybe price went back to to retest that level, but then I don't need this, right? As long as I have my pattern, that's all I need. We had all these push as an impulse, and then all this pattern is a correction. So what did we say? Wait for a reaction around the third touch right here. Once price gives us an indication that she's ready to go, that is where we look for our entry position. Whichever amount, let's say maybe we risk that 78, then target at least 3%. Boom. We hit 3%, something like that, right? Now, it's the same thing we can do, right? Wait for, this is a smaller one. Wait for a reaction. Price goes up. For the ICT people, price goes up. What next? Look for a pattern. As it pulls back, look for a pattern. Once the market gives us a reaction, we go in. Our stop loss, 3%, at least 3%, something like that, right? 3%, 3%, something like that. Now, this is a smaller version, but then remember, this is also another version. What am I talking about? We had a push from this level, clean, correct? Now, remember our first push was from this level, price goes up, then comes down. Now, from here, then she pushes all the way up. So that means we also have this level right here is our order block zone, because that is where we had our push, another push phase, an impulse phase right there. Let's adjust that. Now, once price pushes all the way up, we look for a pattern, right? Look for a pattern for it to pull back. If you look at this level, did you have any pattern? No. Did you have any pattern? No. But then price started pulling back. As it pulls back, we continue following along, and have it right there. Now, since we understand that, we can start from another 2 touches. Adjust this because we understand all this is just a pullback. Start our 2 touches, something like that. 1, 2, 3, 1, 2, 3 right there. You can also have a 1, 2, 3, something like that. Make it simple. 1, 2, 3. And remember what we talked about. We now are back to this level. The market pushed back all the way up. Now look for a pattern. As it pull back, that is where she did pull back. Then look for your entry position. I hope that makes sense, guys. Correct. Now, let's talk about let's come back to this level. Somebody like, oh, the market pulled back maybe around this level, but then why didn't you take? Correct. That's a good question right here. Let's talk about this level here. Price did push all the way up, correct? Look for a pattern. Which pattern did the market give us? Remember 1, 2, 3. We have a 1, 2 right there. Maybe something like 1, 2 right there. But then what happened? Did price break out of our pattern? Did it go back to give us our third touch? Let's try to adjust this 1, 2. Did it do that? Let's remove this. Did it do that? Price, did it go back to break out, to go out? Nothing. The market just gave us a pattern, double top, but then continue dropping. So this is not valid, guys. Correct? You guys see what we talk about. Price goes up, boom, 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 breaks, we go. Simple. right? So that is very, very simple when we talk about ICT, and maybe SMC. Now we can do as many as you guys can want. We have price pushes all the way up right there. Look for a pattern right there. Look for a pattern. 1 2 3 right there. Break right there. Look for your entry opportunity, something like that. At least target 3%. Okay, we had a 3%, maybe right there. Price plays donuts, then at the end of it, price will try to hit take profit. Now I hope that is easy for you guys to understand. Now let's talk about calculating your lot size, right? You need to understand how much you're risking per trade, correct? Now I think let's use this. For instance, let's use this level right here. Let's say we've done our analysis. That's an impulse phase. Then we have our pattern 1 2 3 probably, and another one right there 1 2 3, and then let's say we've had our entry opportunity right there, and our stop loss is below right here, and of course targeting 3%. Let's say we target 3% or something like that, right? So onto this trade, remember each and every trade has different lot size. You don't need to be entering maybe 0.1 on every trade, right? No, each trade should have different lot size, correct? Now I'm going to show you how you guys can easily calculate your lot size, but then you don't need to do the maths. You let the computer do the maths, right? So all you need to do is click on, let's say you are analyzing Euro GBP, click on Euro GBP and copy this right there, and then go to your Google Chrome right here. Now there is this website right here, you guys can see fxverify.com. Then come to lot size calculator. Right now, the moment you come to lot size calculator, this is how you'll get the interface, starting from stop loss, something like that. But then I need you to hover your cursor, something like that. Then this will pop up. Click on it so that we can switch it back to open price and stop loss. I'll repeat that again. So right now you see it's based on our pips, but then we don't need that. We need to calculate our lot. Click on that easily, right? So click on instrument, then now paste the Euro GBP that we clicked on, and then right there she is. So the next thing is then you need to do, go back to trading view, and then double click on trading view and click on enterprise. Click on enterprise right there, and copy that, then paste it back to right there on open price. Then the next thing, we go back to trading view once again, and you take the stop loss level, copy that, something like that, and then paste it on our stop loss level right there. So the next thing you need to do is just hit calculate. So onto this, if I have how much is this? This is huge. So let's say I have a $10,000 account right there. This is 10,000. Then I hit calculate. So you see, onto that trade, I'm supposed to use 0.56. Oh, this is 2%. I'm not really supposed to risk 2%. I'm supposed to risk 1%. I'm supposed to use 0.285 on that trade, and I'm going to risk 100 USD, right? So let's say I have a 5,000 USD account. 5,000, 1 2 3. I hit calculate. Onto that trade, I'm supposed to use 0.14. I'm going to risk $50, right? Now let's say I have a 20k account, 20,000. I'm supposed to use 0.56, that's to risk 200 USD. What if I have 100,000? 3, is that 100k? Yes. How much am I supposed to use? You see, I'm supposed to use 2.84 lot size. So you see, I'm risking 1,000 off it, right? So that's it, right? Now you see, let's say I just have 10,000 USD. Let's just take it back to 10,000. That's why I say each trade has different lot size. So you see, right now I'm supposed to use 0.28, and I'm my risk is usually 100, right? That's 1%. So let's say the next position, maybe I have my entry right there, and then my stop loss maybe around that level right there, correct? Let's say we have it right here, probably our entry right there, and then at least target 3, maybe around that level 3, right? So yeah, my stop loss is right there, 38.8. So I click on that, copy, same thing we did, then go back to enterprise, paste it. Remember, this time the previous time we used 0.285 and our money was still 100. So we're just going to risk 100 USD on that trade, but then lot size will be different, right? So let's see how many lot size we should be using. So click on a stop level, copy that, take it back to our site, paste it. Let's see. So on to this next position, I should be using 0.19.8. See, I'm still risking 100. I'll do the same once again for you guys to see. Now, for those who maybe catch those sniper entry, let's say sniper entry, and then have a very tight stop loss, let's say something like that. Let's do the same. Our entry, I think, our entry. Let's just copy our entry once again and paste it, and take it back and do the same, copy level, and take it back and paste that right there. Now remember, same position, same trade, we should be risking only 100, right? So now let's see what we did. Now this time we are risking, we're using 1.2 lot, but remember our risk is still 100. Simple, right? Now I think you guys understand. You need to calculate your risk. You don't need to stick to same lot size, 0.2, 0.2, 0. No, each trade, each position has different lots, right? I hope you guys have seen that, and I hope you guys have understood, right, guys? So that is very simple when it comes to forex market. That is now when you want to do your entry analysis. Now, last but not least, now let me just give you how I do my analysis before I finish. Now, for instance, if I want to now trade this Euro GBP, I can start from the weekly time frame. This is how I do my analysis, basically, guys. Right now, what is price doing? Remember the things that we've talked about, patterns. That's what we look for. Now, first things first, sometimes I won't even need to use my trend the way I've taught you guys, right? I can say, oh, there's something right here. There's something right here. I can do that. I'll adjust that when we go to the lower time frame. That is enough for me. Right? I've seen the pattern. This is enough for me. So what next? I want to go to the lower time frame and see if I can capitalize on this move and see maybe if price pulls back, yeah? Because right now all I see, we had a pattern, we have symmetrical triangle right there, and we've seen she has broken. So we are very, very confident that this market will continue pushing all the way up. Now, in essence, we still understand that the market will go back, to retest that level right there. So that should be at the back of our mind. Now, remember, this is on the weekly time frame. So as we go down to the lower time frame, we should be waiting for little pullbacks, for us to go in, right? So now go to the daily. We now simplify everything step by step. Go to the daily time frame and repeat the same thing that we've just done on the weekly time frame. Patterns, correct? Over here, I can try to use this. If it makes sense, we go for it. Let's see. Right there. 1, 2, 3. Right there. That is what already we have, right? For those who use Fibonacci tool, we can see how many retracements so far we have. That's 50%, which is amazing. So that's a good one. Retracement. Price has given us a good retracement, basically, right? So this is how I do my analysis. So basically, I have another pattern right here. So the next thing, I'm looking for buys. It's just the same thing. I'll go to the H4 real quick. You see how I'm simplifying my analysis right there. But then before I do anything, I need to make sure I adjust my drawing so that I don't get caught up in the market manipulation or market madness, something like this. Something like that. So that's said and done. Very simple. So my next thing, or our next anticipation, is wait right there. So how many pips till the market gives us that 43 pips, right? So here comes the thing. We have your edge, sticking to that edge. Price might just come right there, doesn't give us any opportunity, then continue dropping. No worries, we don't take any trade, right? we delete everything, we remove everything right here, then try to see, okay, what pattern is the market forming. We try to join the dots. If we see, oh, maybe she was forming something like this, no worries, we evolve right there. But then if she doesn't break, then comes back, you know, she starts to play around this level, gives us our entry, then boom, I'm looking for my buy opportunity right there. But then this time around, because we understand from the weekly time frame what price is telling us, we understand that this is just a continuation and price is just going to break it and continue going all the way up. That is the very a very simple way for me, you know, to do my analysis. I'll repeat, maybe I can need to take another pair, random pair, blah 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 blah. Okay, let's talk about USD JPY. I can start from the weekly time frame right there. What are we looking for? Patterns, guys, right there. So this is what we have on what's this, on our USD JPY. First things first, we had a pattern right here. This is a good one. Okay, that is something. So that tells us, okay, this market is continuing. The market is just continuing, right? The market goes up, down, goes up. So the moment this is done, we have identified that. You can see boom, blah 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 blah, boom. So one special, blah 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 blah, boom. Easy, correct? Now, so far on the weekly time frame, we've not seen another blah 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 blah. I'm talking about correction or a pattern. We've not seen a pattern. So we go to the lower time frame and see what price is doing right here. Good. We go to the daily time frame, slowly by slowly. Right there. You see how I'm doing my analysis? So simple. You guys, if you like, you can adjust this. You can adjust that if you want. But I don't need it. But anyway, because you guys are still learning, let's just have it. I don't need it right there. So this is what we have. We have a pattern. Price pushes up, breaks out of it, retest, then now start to do this, right? So the next thing is look for another pattern. If you don't see a pattern, don't do a thing. Don't do a thing, guys, right? Correct. Now I'll go to the H4. Remember, if you don't see what you're looking for, stay away. Let the market communicate, right? There is something right here. You guys can see we had another pattern. Price pushes up. Have we seen any other pattern? Let me see. Like I say, guys, anything goes. Let's see right here. We had that. Let me see. Okay, anything goes. So far, I'm not seeing anything clear though. But then that is what we see. As of now, we are looking for this kind of continuation. If you see right now, the market is moving up, nothing, right? Over here, let's see what she did. Okay, what did price give us right here? She gave us something. Makes sense now. Let's remove that, right? So yeah, she did give us something similar to this, but now nothing has happened yet, right? So we wait for the market to give us this kind of behavior, and once again, blah 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 blah, then we go in for our buy opportunity. That's simple. And let me give you maybe a last example before we call it a day. Maybe another one. What's this? NZDCHF. Okay, maybe you guys can think that I'm just choosing any pair. Oh, I've clicked on you. Let's avoid GBP. Let's see what's Euro NZD telling us. I can start weekly. Let's hit the weekly and see first things first. See if we can come up with something. All right, there was something. Anything goes. Let's see what we had there. Okay, right here we had something pushing. We had a pattern that just tell us that okay, she's pushing up. Do we have anything here? Let's see. Maybe daily had something for us. I don't need to adjust this, guys. I'm just trying to be in a hurry, you know. Let's see. We have 1 2 almost 3. You can have this right here. Adjust this. Okay. So this is it right there, something like that. So basically that is what we see. right? So our anticipation is wait for another pattern in this manner. Remember, this is still the daily. You have not seen what price telling us on a lower time frame, but then if we see this kind of a pattern or move, wait for it on the third, then we understand that we should be hitting the sky, something like that, right? Good. You see how simple it is. Just looking for patterns. So the next one, let's see H4 and see what price. You can adjust this if you like. What is price telling us? Has it broken out of this? Yeah, probably. So yeah, we can have this as of now and wait and see what price is trying to do. As of now, we wait. She's not yet ready. So we said we wait for price, look for reaction. Once it breaks out of it, the channel, go in, right? Now there's this also, price might decide to continue dropping, right? And then does this, gives us a pattern right here. Then that's when she goes up. So once she gives us a pattern, maybe around this level, maybe something like this, and that's where we look for our buy opportunity right there, because we understand that she will be, touching the sky. It's just the same over here. You see, she did drop, continue dropping, then started giving us patterns right here, 1 2 3, 1 2 3 right there. And as usual on the third, wait for reaction. Boom, break, retest. Okay, right there. Boom, on the third she went up. So it's just repeating the same thing, guys, right? So yeah, I have a Telegram channel, guys. Let me show you. Link should also be in the description box right here. So this is my Telegram channel, Fast and FX. You guys can confirm. Maybe you guys can join. So these are trade ideas. You see the same patterns that I've been talking about right there, just repeating, right? I give out signals too, so you guys can check out, right? So if you don't understand what we talked about, you should check the video in the link in the description. I mean, you should rewatch the video, right? As we were talking, guys, I've seen the same thing that we've just talked about. Remember, I said, let me just take this back. I said sometimes the market will just drop and then give you patterns instead of coming back a bit. Instead of doing this and then going, right, the market might just continue dropping, then start giving you pattern right here. And that is what she did right here. You see, she did that, then boom, then that is when she started giving us patterns right here. 1 2 3 right there. Boom, then she went all the way up. We had this, of course, we had this right here, symmetrical triangle, right? So yeah, I hope that is it, guys, and I hope this video will help you guys in your forex trading journey. So if you don't understand, guys, just watch the video slowly by slowly. Take it slow. Everything is going to make sense, right? So yeah, adios amigos.